Hey guys, and welcome back to a new weekly outlook. This time we're going to be looking at calendar week 42 of the year 2023. Let's take a look at the Forex Factory news schedule. Really, by taking a look at it, we have news on Monday, Tuesday, and on Thursday, but nothing really significant. We have Powell speaking, so I might look out for that. Thursday, October the 19th. He's going to speak at the Economic Club of New York, but we will have FOMC news on November, the first week of November, paired with NFP news, so I don't think he's gonna drop any major clues regarding that FOMC news event here on Thursday this week, but we will see. Could. That's why I'd likely be more hesitant to enter trades. On Thursday, it's gonna happen 12 p.m. So the AM session could get a little bit tricky, but we will see about all that. We will see how Monday and Tuesday is setting up the week, and if it's worth trading the New York AM session. Another thing that I really want to take a look at is the seasonality charts. And looking at all curves at the same time, we can see that generally speaking, we had a uptrend during October over the last 15 years. And because we're doing it every week, we're also going to look at the Traders in Financial Futures Net Positions report, and specifically the institutional summary report, updated on the 10th of October. So that was on Tuesday last week. And on the indices, if we scroll to the downside on the S&P 500 E-mini, we can see that we had a change of negative 29,000. Overall, we're still positive. So we still have, majority is still long of these institutional asset managers. And to get into this category, you have to trade big money. And overall, over this week, we can see yet that the short positions increased. In comparison to the long positions, they decreased. On a 52-week average, overall, we're still bullish. And if we take a quick look at the NASDAQ, we can see that we had the opposite here. We had a positive net change. So this is quite contradictory, but we cannot predict anything with that. But it's just good to always have this in your practice, to look at barchart.com, the Traders in Financial Futures report, to know, or because maybe sometimes you spot something that's really standing out, and if it's there, you want to make sure that you were aware of it and you didn't miss it. And now let's jump right into TradingView. We're looking at ES1 on a monthly time frame, and we spoke about it in Friday's live stream, that we hit the entire monthly bullish fair value gap after we shifted market structure to the upside. Market structure shift bullish. Let me put that in my monthly category. And we can also see how perfectly aligned the consequent encouragement and this market structure shift level is actually. So we could look at those two candles as our monthly order block if we want to. We have a monthly bullish fair value gap. We respected the 50% of it. And how did we open up during the month of October? With a nice monthly gap to the upside. Right now the monthly candle is bullish, but we can see that we both hit the extremes of the bullish fair value gap. So we repriced into the low and we moved away from it above the monthly bullish fair value gap, but we've got rejected for some reason. So we want to keep an eye on this, because ideally the month isn't over yet, of course, and we spoke about that October is generally a uptrending month, which would play into this overall monthly bullish fair value gap narrative. Knowing this, we can drop it down to the weekly. And on the weekly, while still looking at our monthly bullish fair value gap, we see, let me turn on my weekly analysis, that we hit most of our bullish fair value gaps to the downside that haven't been filled yet. We hit this one right here, and we actually kept on holding support here. We even hit this lower one, paired with this old new week opening gap. We hit it last week, and we immediately rejected. And during the last weekly outlook, we actually spoke about this this weekly candle being a rejection candle, which could lead to higher prices for the next week, which was last week now. But like we spoke about on a monthly time frame, we got a rejection to the upside, which is not ideal. I mean, yes, we could have expected that because we hit a weekly bearish fair value gap right here, a old new week opening gap. We didn't even make it up to the 50% of our weekly bearish fair value gap. And we also didn't manage to close above our weekly inversion, which actually kept holding support once, twice, and then we closed below it. Then it kept holding resistance and we delivered in all those lower targets. So we want to keep an eye out on what the next week can do right now. The first week of October had a rejection week to the downside. And the second week, yes, we had this bearish new week opening gap right here, but we managed to close above it. We closed it in already. And yeah, but we have a rejection week to the upside. So downside, upside, it's not really making it easy for us here on the weekly time frame. We can also look at our current weekly range that we're inside, and therefore I'm referencing this high right here, Monday the 11th of September and Monday the 2nd of October. And if we draw our PD array from the high to the low, we can also see that we went above the 50% of our current weekly range into a premium to deliver lower into discounts. So it moved already up into a premium. We rejected from that area around the new week opening gap inside a weekly bearish fair value gap, which could potentially lead for lower prices. But as we can see here on the weekly time frame right now, we're stuck between two PD arrays. Now I drop down to the daily time frame and we can see that we retraced into this daily bearish fair value gap as well. And if we look at the current weekly range once more, so it becomes obvious to us, we retraced into the 50%, which actually lined up perfectly with the low of this bearish fair value gap here on the daily. We hit a old new week opening gap and we almost hit the low of this candle right here, which would have been high, low, high, higher low, higher high, higher low, higher high. Displacement to the downside, our bearish breaker block. But we fell short of that. And if we continue to look at the daily time frame, now let me turn off the weekly analysis. On Friday's live stream, we identified this bullish daily fair value gap. We kept holding support on Thursday, but now already on Friday the 13th, we managed to close below it. So I'm not really sure what that could mean. But looking at the daily time frame, we can identify a change in the state of delivery. Right here, we formed a low, a lower high, a lower low, a lower high, and another lower low. After, like we spoke about on a weekly and monthly, filling the low of the monthly fair value gap, filling in most of the inefficiencies on the weekly as well. And what did we do afterwards? We had a very strong displacement. And that's really what I'm looking forward to see next week, because I'm really relying here on the daily time frame. We have had a bullish market structure shift. Of course, this could be a fake out. It always could be, but right now, this is our best bet or opportunity that we could look at. Bullish market structure shift. And we measure the 50% of this current daily dealing range. And yeah, basically what I would expect heading into next week are lower prices below the 50%. As we can see, we do not have any further fair value gaps here to the downside on the daily time frame to reprice up higher. We already moved into a premium of the weekly range. We hit a premium bearish fair value gap right here. And what do? We move up, we retrace, and we continue up higher. That's really what I'm looking forward to see next week. And let's see what we can get if we drop it down to an hourly time frame now, like we always do. So on the hourly time frame, this is our current daily PD array from low to high. This is our daily bullish, daily market structure shift. Let me put those two levels into my daily folder. Here we have that daily bullish fair value gap, but let's hide that here quickly. No, we leave it on. So what I would like to see is I would look for the closest sell side liquidity in a discount to still frame higher prices. Here on a lower time frame currently, we are in bearish market structure. Here we had our market structure shift on the hourly time frame. You can see we formed a higher high, higher low, and another higher high. We had our strong displacement. Once again, we fell short of our breaker block right here. We retraced into this hourly bearish fair value gap on Thursday. And on Thursday on live stream, I was in a paper trade short, and I was really looking forward to Wednesdays and Tuesdays equal lows to be hit. Played out perfectly off this 1 hour bearish fair value gap. If you trust the higher time frame structure, you have a much easier time on the lower time frames. So we cleared all that sell side liquidity from last week's Monday, Tuesday, Wednesdays pushed to the upside. Now we retrace back into a discount for higher prices, and the closest sell side liquidity would be the previous week's low, Monday's low. So we will see how we are going to deliver into it. We already have had Friday's push to the upside to fill in this entire bearish inefficiency. We displaced lower. We managed to close below this low eventually right here at the closing hour. We already retraced into this 1 hour bearish fair value gap. But of course, we could also see initially a little move to the upside into some buy side liquidity before then eventually continuing lower to reach for more sell side liquidity. We will see how Monday sets up. We also have news. If I'm correct, we have news at 8:30 a.m., the Empire State Manufacturing Index. We have this daily bearish fair value gap, which actually now is a inversion fair value gap because we closed back below it. We've been closing above and below it for a little time. And if we look at this daily fair value gap on the hourly time frame, it's also a hourly bullish fair value gap below all the sell side. We haven't closed below it, so that's also something to look out for. If we manage to close below that, I think we have smooth sailing into Monday's low sell side in our daily discount. And if we make a ICT fib retracement out of this, hang on, no, not that one, ICT fib retracement, and we look at our displacement on the daily time frame from low all the way to the high, our 61.8 Fibonacci retracement level would end up at 4,310, and our optimum trade entry, guess where, comes in play below Monday's low. So this is going to be very interesting for me. Then I want to see if we cannot maybe trade Monday, Tuesday down, get some sort of a reversal setup here to continue back to the upside. Because we can't always just continue to rally to the upside, we have to clear some internal sell side liquidity now. And yeah, that's really what I'm looking for. This lines up with the overall daily higher time frame analysis, also with the monthly bullish fair value gap narrative, and that we filled most of the lower time frame bullish fair value, not lower time frames, lower bullish fair value gaps on the weekly time frame. That's the way. All right, and from same as last week, we still have our 4 hour bullish order block right here and 1 hour, because we cleared all these lows right here, displaced to the upside. Then on Monday we open up with this huge bearish new week opening gap. So I think that might still come into play for this week, but we will see what's going to happen. Right now we're obviously in the sell side of the curve. So on Monday, Tuesday, I'm not really gonna look for any longs on the lower time frames, because I want my lower time frame trades to really align with what I analyze on the higher time frames. And right now we had a bearish change in the state of delivery until we reach at least the 50% of our daily range. I'm favoring shorts on a lower time frame. I think that's what's most important. We're not super far away from it, but yeah, like we spoke about, our sell side liquidity target, my ideal sell side liquidity target would be right here at 4,300, below Monday's low. And now if we look at our 1 hour time frame PD arrays, we can see that on our initial displacement market structure shift PD array, these 2 hourly bearish candles were followed by a retracement back into a bearish fair value gap in premium. We rejected and we had another push to the downside, clearing sell side liquidity. And once again, we measure from high to low. And what did we get? We got a retracement into this 1 hour time frame inefficiency. This time we filled it in completely. Right here, we can see that. We filled it in completely. And what did we do? We continued lower. So following this pattern, if we want to see lower prices, we could see maybe some lows being taken out right here, maybe even this one, before we pull back into this buy side inside of this bearish fair value gap. This is our entire leg to the downside. Yes, we've already filled it in partially with this rejection wick here at 12 p.m. on Friday. But really, yeah, this is the closest buy side in a 1 hour time frame premium right here at 43.76. So it's hard to predict what it's going to do first. Of course, we could first clear some buy side, then continue lower. This would make the most sense, but sometimes we do not get what makes the most amount of sense to us. So overall, this is just a weekly outlook to prepare ourselves with what could possibly happen next week. And now, before the end of this weekly outlook analysis, let's also take a last look at the DXY on the daily time frame right now. You can see we spoke about that on Friday's live stream, how we swept this internal sell side liquidity. We've been in a very strong rally and we just swept the sell side. We didn't close below, and this is the major point. We did not close below the sell side. Instead, what did we get on Thursday? A strong push to the upside. Right now, what do we have available? We have a bullish fair value gap below us that price could possibly use as support, like this maybe, to continue into buy side liquidity. While the bullish scenario for the DXY would actually go against our analysis that we just did on ES, I also want to point out the bearish case for the DXY and the bullish case for the S&P 500. And what we could be doing is we could continue higher on the DXY to clear potential buy side in a premium, to continue back lower, ignore this bullish fair value gap, use it as resistance to deliver into this sell side. We will see what's going to happen. I'm very excited and curious of what we're going to see next week, but I'm sure we will be able to catch a few nice trades throughout our live streams. Until then, enjoy the rest of your weekend, and we will see each other next week. Bye.